Yeah, I think some of the negative reaction to what's happening in the Chinese economy is probably a little exaggerated. Last December we knew that there were some big problems on the export front and with industrial production. Since then, the major announcement was the December quarter national accounts, which were quite poor by Chinese standards, but that was really just a confirmation of what we already knew. But on the positive side, the positives are still there, and that is we're still expecting the Chinese economy to be really the main locus of growth in the world in 2009. While the rest of the world's in recession, China should still be growing, even at a weaker rate. But more significantly, I think China will probably be the first major economy to register a real recovery, hopefully, around the middle. The hardest hit sector is clearly the export sector, for obvious reasons. That the global slowdown in trade has been quite dramatic. And quite distinct from that, there's also a very marked slowdown in China's construction sector, which is affecting a whole range of industries, not just real estate, but steel, household, white goods, motor vehicles, and the core of the Chinese slowdown is centred in the construction industry. It's very, anything that's not heavily exposed to trade should do relatively well. So much of the domestic service sector still offers very good prospects for the short term, and also there are many industries are targeted towards the domestic market, and they, for example, while manufacturing has been heavily hit, the manufacturing servicing of the domestic market should be the first to pick up, whereas the manufacturing servicing the export sector should take much longer. We've already seen some initial effects, which is quite interesting, because there's still not a truly dominant state-owned sector, but still a very large state-owned sector in China. The government has been able to engineer a very quick turnaround in some areas, particularly investment by large state-owned enterprises and lending by the state-owned banks. And that's quite important for getting the stimulus package working. But stimulus packages, by definition, don't happen overnight. So while it has clearly got off to a start, we'll see it rolling out throughout the year and probably into next year as well. As I said, the key thing we have to watch for in China is a recovery in the construction sector, and that's likely, part of that's government controlled and part of it's privately controlled. And the real question is how rapidly the private sector will respond to the government stimulus. Now, the policy settings are in place, and our best forecast is at the moment that we'll see something in the second half of 2009 in terms of a turnaround of the private sector. The only question mark over that is the damage to long-term investor confidence, but it's probably more likely at the higher end of the property market, not something that would affect the whole property sector. The 8% figure is really not technically correct. I mean, China could actually generate a lot more jobs with low rates of growth if it liberalised the services sector. So you don't have to get 8% growth to generate new jobs in China. But under the current economic structures, it's looking like you do need those sort of high rates. The problem the government faces is that 8% is achievable, but very difficult to achieve this year. It's very much the optimistic scenario of a quick turnaround by June, July, with things getting back into place quickly. But certainly our best guess is that they're looking more like 6% at the moment rather than 8%. Mm-hmm. It's obviously you have to fit your China expansion plans into your global plans, but the key thing is that despite what's happening at the moment, China's long-term growth prospects haven't really changed at all. It's still going to be a major global growth economy for the next 20 years or so, and people need to put their long-term investment plans in that. In fact, it's actually done a very good job in that respect so far. It hasn't played any games with its exchange rate. It hasn't. It's done. The simple approach is just it's done its best to fix up its own economy without doing things that would destabilise internationally. It hasn't tried to restrict trade. It hasn't tried to. It has tried to do a broad domestic stimulus, which of course is good for China and the world. So there's probably nothing more it should be doing that it's not doing at the moment, I think.